What's up, guys? Brian Ellwood here. Did you guys know that the average American income is about $50,000 a year? Did you also know that you can make the same amount without working if you own just 12 little ugly cheap rental properties? It's crazy, right? So this spreadsheet is designed to show you exactly how those numbers would break down and how you would earn the same amount as the average working American by just having 12 little ugly boxes, okay? So I hope you guys are excited for this video because I think it's really going to open up your mind. So on this spreadsheet, I have the average numbers for the houses that I personally buy, okay? It's the same numbers for all 12 houses, just the rough averages that I generally experience, okay? So in my markets, I can buy houses and fix them up all in for about $50,000. I know that probably sounds crazy, but there are tons of markets out there where that is happening each and every day. So I might buy a house for, let's say, $35,000, put 15 grand into it. So I'll be all in it for $50,000. That's what this column here reflects. Column B, purchase price plus repairs, 50 grand. And then once I'm done fixing it up, it's usually worth about 75. So I have a nice chunk of equity in the house. Now, I usually borrow all of the money for the purchase price plus the repairs. I use private money lenders for that. So my loan balance on the house would be $50,000, okay? I have $25,000 in equity. And these houses usually rent for about $900 a month. That also might be surprising to you. But for me, it's the required minimum if I'm going to have a good, safe, healthy amount of cash flow on the houses that I buy. So $50,000 house that rents for $900, you're doing good, okay? And then in this scenario, moving on, the payment to my lender is usually around $300 a month. That's my payment on the $50,000 I owe, right? The property manager always takes 10%, so that's $90, 10% of the rent. I always spend about $50 a month on insurance and $50 on taxes. Again, these are rough averages, okay? And then you always want to take 15% of the rent and put it to the side because you're going to have vacancies and repairs. That's what this column is, okay? The house is going to go vacant every now and then. You might lose a month of rent. Things are going to break. So you budget for that and your house should still cash flow afterwards, okay? So $135 a month for vacancies and repairs we're assuming is going to be lost. So the net rent on a house like this each month is about $275 per month. Okay, that's a nice healthy chunk of excess cash flow per house. Okay, so let's kind of look at what the totals would be for the whole portfolio. If you were to get your first 12 houses, which is my goal for you. Well, first of all, your portfolio's value would be literally almost $1 million. You look at this, $900,000 if each one was worth $75,000. Now that alone is huge because real estate appreciates at 5 to 7% a year. So you're making, I don't know, roughly $60,000 a year in equity, which is huge and amazing, right? Your loan balance on that would be $600,000. You'd have $300,000 in equity, which is also huge. You'd be bringing in about $10,800 per month in gross rent from all 12 of your houses, okay, at $900 per house. Your lender payments would be $3,600 of that would go to your lenders. Property manager would take $1,080, $600 for insurance, $600 for taxes, and then $1,620 for vacancies and repairs, okay? So per month, you would net about $3,300 if you had 12 houses that were similar to the one in this example, okay? $3,300 per month net in your pocket. So let's look at what would that break down to. So we go down here, net cash flow per month, $3,300. Now if you times that by 12 to get your yearly cash flow, it's $39,600. Now in the beginning of this video, I promised that I'd show you how it's the same as making 50 grand a year at a normal salaried job. You're probably wondering, well, now I'm seeing 39,000, Brian, what gives? So let me break this down for you. This is one of the biggest secrets that real estate investors benefit from. there's a huge write-off that you get every year called the depreciation write-off. It's something that you are required to take by the IRS, and it really, really helps you, okay? It was created to encourage people to buy real estate. So what that says, the depreciation write-off says that you take 1/27th of the value of the structure on the property. So they don't include the land value, just the building. So if our total value of our property is 75, let's say that the house itself is only 50 of that and the other 25 is the land, right? So $50,000 is the value of each structure, right, that you own. You divide it by 27, you get $1,851. So you're writing off that much per property per year, okay? That 1,851, if you times it by 12, because you have 12 houses, your total depreciation write-off is over $22,000, as you see here on the spreadsheet. You guys don't need to worry about understanding 100% of what I just said. Your accountant does this part for you. But I just want you to look at how huge that is. So if you're bringing in $39,600 a year in net rent, but you get to write off $22,222 of it to depreciation, that is over 50% of the money that you brought in is sheltered from tax because of that huge write-off, okay? So that's the bulk of this. And then you're going to have repairs, right, that you've already paid for. Remember, because you budgeted for it over here in this column, $1,620 a month for vacancies and repairs. That's almost $20,000 a year, right? So if half of that went to repairs, which I've got $9,700 in here, it's about half of it, then that's also deductions, things that you will be writing off, right? It's money that you spent already. And then I've got other expenses on here because you may have like a virtual assistant or an LLC, you know, that you have to pay for. There could be a P.O. box. You could have some software that you use. You could take some trips or write off some meals, right? So $2,500 is conservative. It could easily be more than that. So when you look at this, $39,600 is your net rent after you deduct the depreciation write-off, the repairs that you're going to pay for, the other expenses. You're left paying tax on $5,000, maybe less, okay? I personally, you know, could easily pay tax on $0 just because of the write-offs and stuff that I've got. And that's what a lot of real estate investors do, okay? So maybe you end up spending $1,000 on taxes and you net $38,600, let's say it, $38,600, okay? That might be what you net. Now, let's go to the scenario where you work your ass off at a job, right? Making $50,000 per year, okay? Once you pay the going tax rate, which is 22%, I believe, on $50,000, you'll pay about $11,000 of that to the government. So you make 50 and you'll lose 11. What are you left with? $39,000 a year. 39 grand. I mean, they're literally almost identical, the two outcomes. You can either work all year long, 40 hours a week, you know, and net 39, or you can own 12 little ugly boxes and not work and let the money come in for you. Is this cool, guys, or what? So if you guys are interested in learning more about how to do this, click the link, download the spreadsheet that shows you these numbers. All the formulas are included. You can play with the numbers, and you can use this as you start to grow your own portfolio to track your own cash flow. I've been using a spreadsheet like this since day one, and it's been really helpful for me to track my goals. So download the spreadsheet, and I hope to see you guys on the other side. Peace.